How's everyone doing this morning? Can I get a quick mic check? Good morning, good morning. All right, well, had a nice little run up here. And now we're just consolidating at new highs here on the SPY. And just kind of waiting to see what the market wants to do from here, right? Making a nice little flag. I think we've moved up quite a ways for the day, and so my guess is we are just kind of going to consolidate. But we could get another move up. Who knows? Who knows? I mean, this thing has just been relentless. Bill, they're doing good. They're doing pretty good at the moment. So into the butterfly that I put on this morning at 10 o'clock is it's out of its range at the moment. But I'm not so far underwater that it's going to be an issue. And that butterfly is basically the iron butterfly is just a trade that's put on every day at the same time, and I'm just tracking its effectiveness at that time of day. And then I put in chat. I put a call credit spread on at 10:30 as we were up into these highs. That one's doing great. I'm just sort of letting that one run and trying to get some theta decay on it, and hopefully we don't get a big push up. But that one's working great. And then an iron condor I put on at about 11, and we'll see what happens there. And so the butterfly and iron condor are paper trading a strategy that I'm just kind of looking to get some data on. And then yeah, they're all zero DTE, so they all expire today. And so, but the one that's been working quite well is the credit spread, and I thought I would talk about the credit spread a little today, because it can actually be a good way to take part in these sniper 1.0 style trades, and not be so what would volatile. They're not quite as volatile, right? So basically, I have a setting that will at 10:30 Eastern time, the market will typically reverse on some level, and not always. Yesterday that didn't happen, but it gave us another opportunity a little bit later. And so what I'm looking for are highs and or lows to play credit spreads against. So a call credit spread if I want to play it to the downside, and a put credit spread if I want to play it to the upside. And I am Cal. I don't. I either say them on the mic or I put them in here into the chat. I don't have a trades tab post that like Nate Bear does. Myself and D-Man just kind of announce our trades either in text or on the mic. So what I'm doing in that case is, as we come up to a range, and there's a lot of different ways I'm trying to measure a range, but we can talk about it in the sniper 1.0 style. Here we had our ready, our aim, and our fire indication, and we were at an upper range. So what I did was then put on a credit spread on the SPX. And so basically, what a credit spread is, it's sort of a defined risk, but it also defines your win rate as well. I am selling, I sold the 518s. Oh, I'm sorry, 5815s, right? So I sold the calls, 5815s. Hold on, I'm putting a mark there. And then behind that, I am buying the 5820s. So they're 5 wide, right? At the time, I was slightly in the money on the sold. So I sold that one and I bought this one. And it was a net credit of about, I'm trying to, I could go back. I'm trying to remember. I think it was, a net credit of 280, right? With a max risk. So I get the 280 by selling, and my max risk was somewhere around a 230, I believe, when I put that on. So essentially, depending on the timing of when you put this on and how good your fill is, you're really, it's a 1-to-1 risk reward trade. But the nice thing about that is you're capped on your loss, right? You're also capped on your win. But on these 1.0 trades, if I was taking one contract on a rollover, in the a reversion to the mean type trade in the SPX, I would be taking that off at 250 or thereabouts, right? So the win rate is, or the profit potential is basically the same. I've capped my downside risk, and if it wants to go sideways for a while, I'm letting theta work in my favor because I've sold those calls and taken a credit for it. So as time goes on, the theta starts to work in my favor. Does that make sense? So these are good ways to do that. So then the nice thing, so this is a 0 DTE trade, right? And if this will come max profit as long as we finish the day and the SPY close or the SPX closes below that level, right? Anywhere below that level. It could close here, it could close down here, it could close here, and that is a max profit trade, right? So that is a kind of a nice play. And then obviously if it works quickly and comes down into here, you can take that off for, the 280 was the max. If I'm coming in and I'm getting, because we've rolled over, I'm getting 200 in, 20 minutes or less, $200, I'm taking that off. I'm just taking that profit at like 75% of the credit. And I'm not going to wait for the day to expire because there's no reason to risk $80 and have this thing reverse, right? And the nice thing about this, like if you excuse me, if you have a small account and you have a cash account, which means you can only use the money that's in your account per day, but then it resets overnight and you're not subject to the PDT rule, which is a great way to do options in a small account, then the max, whatever your max loss is here. So let's say it was a 230 max loss on this credit spread. That's the total amount of buying power that it will use in your account. So, in theory, you could put this trade on and only have $1,000 in your account, right? So, and you can do this on the XPS, which is a mini XPX, also cash settled. You could do this on the SPY if you wanted to, but you would need to take it off. I wouldn't let that one just expire. And so as we play these throughout the day, if you're risk averse or you don't have very good discipline in terms of if the trade starts working against you, you don't stop out well. That's a good way to do these kinds of trades. You just have to know how to execute them in your broker. Some brokers have a very easy way to execute them. Some are a little bit more complex. And then also how to get out of them if you want to stop out. Right, and by selling, I'm using theta in my favor. So this one up here because I'm betting I want to bet that it's going to go down from that point is called a call credit spread. Okay, because I'm selling a call and getting a credit, right? There's a call debit spread, but that works out the other way, right? So it's a call credit spread, and then down here on, let's say I was looking to play a reversal, that would be a put credit spread because I'm selling a put and then buying one behind it for protection. It's a single trade, right? You're buying both of those, or you're selling and buying one within the same trade. But a put credit spread, I'm betting that the market's going up. A call credit spread, I'm betting that the market's going down. Yes, Walter, I am recording. I remembered to do that because last time I kind of went into this and I forgot to do that. So then you're betting directionally on the market, right? But you're also because you're using zero DTEs, you're also letting theta work in your favor, right? So if we go sideways for a while, like from a movement perspective, I'm still not out of this trade. Like it hasn't come down here to where I would be taking it off because the profit made by the move. I'm not going to wait for that theta to decay. But in this case, we're consolidating up here, and obviously there's a ton of time left in the day, but theta is working in my favor the longer this takes to transpire, to take place, right? Whereas, let's say I was here and I bought a put, right? And didn't take off profits into there, and we kind of did this, and we did this, and we did this. Whatever I bought my put for here, it's going to be worth less here, and not just this little tiny difference in drop. It's going to be less in time. Theta will have decayed that. Now, somebody asked earlier, what does theta, how does theta work on a zero DTE type of trade? And there is, like if you have, like if we do, let's do a couple boxes here. Like, let's say we've got, like in a normal option trade, the way theta works is it kind of works in blocks, right? So if this is 90 days, this is 60 days out, this is 30 days out, right? And then this is expiration here. Your curve kind of does this, and then at 30 days it really starts to ramp down to zero, right? So 90 days out on an option, you're only going to see a little bit of theta decay, right? 60 days, you'll start to see some more within that 30-day block. But as you approach expiration date, it starts to really ramp up more, right? And most of the time we're buying buying or selling puts for TPS trades kind of in this range. And so we all can feel that if the trade does not work in your favor, right? Um, these are days, right? Right, days, 60 days out, 90 days out, 30 days out, down to zero. That's how that theta decay happens, assuming the option is going has gone nowhere, right? Let's say it is pinned at a certain price. You're still going to see this kind of a decay curve in your option. Now, now on a zero DTE day, you would think, okay, we're in our last day, right? You would think that it's just basically a decline like this in a linear straight line. And what a lot of testing has shown is that that's not the case. Oh, why can't I erase that? All right, I'll just get rid of the whole thing then. I'll redraw it. A lot of testing, I was actually just reading about this yesterday, is that the decay in a zero DTE really does almost the same thing, right? And then it's even sharper than that. But this is like this is 9:30, right? And then really the decay starts to really fall off at about noon, and then your larger fall off happens like at 3 o'clock to 3:30. So this should really look, and this is kind of hard to draw because I'm doing it with a mouse. This should really look more like that, right? So it drifts off during the first half of the day, but it does not drift off quite as sharply until that last sort of hour to an hour and a half. Right, and so I'm doing a lot of testing on also putting on iron butterflies into the close after like the noon hour, and seeing how that decay really plays into those zero DTE options, because having the ability to play zero DTE calls and puts on these directional moves and or the sniper 2.0s is great. But then also we've had a lot of days this in the past year that just haven't really given us a lot of movement. Like if you look at yesterday here on the SPY, like let me go to a chart that doesn't have stuff all over it, right? If you come here and you go to a 1 minute, right? Like yesterday didn't really do a lot of movement, so there was not a lot of sniper 2.0 continuation moves to be played. And so actually using theta to your advantage really plays well on days like that. So identifying what kind of day we're going to have using the advanced decline and the vold and the ticks can then help inform the decisions that you are making in terms of, am I buying or selling options on a day like today? No, Sprite. I've been using a same kind of idea. It's called Options Alpha. It just gives you the ability to backtest certain concepts and see how they work. But I think I'm assuming Options Omega does the exact same thing. Now, that it's a good question. So RJ Duel says, if I was going to make this trade right now, would I use the same strikes? You can. You certainly can. You're just not going to get the same, because remember, I had said when I took that trade at, oh, let me put the SPX up, sorry. When I took that trade up here, I was putting on the 515s, right? And I was backing that with the 520s. So when I put that on, that was slightly in the money, right? Which was giving me, what did I say, 280 to 230 risk, somewhere thereabouts, right? If you use those strikes now, right, you'd be slightly out of the money, and so you'd probably get that skewed to, you'd be like a 220 max profit to, at 300 max loss, right? So it would skew that, but you certainly can. And another thing you can do is, if you slightly more conservative play in some cases, like if you're coming up and you think this is going to turn here, you can actually sell, credit spreads. You could sell the 825 and buy the 830 behind it, right? And you're way up here, giving yourself, right, room for this to, maybe not be exact and maybe roll over. You're giving yourself, $5 or so, but your skew is going to be, this is going to give you 100 max profit, and like I'm sort of guessing here, and you can check these all out, and $400 max loss. So if you didn't manage this well, and this thing just kept going like this, your risk reward is pretty skewed. But you can always cut that trade at, you can always have a stop for that. You're just kind of skewing, and that's up to the decision you want to make as a trader. Like, I mean, you can even go out here and sell. I mean, I can look at what they would be, but you could sell the 830s and buy the 835s, and you'd have a $50 max profit, and who knows what $800 max loss. But buying at the money gives you a little closer to a 1-to-1, but you have to be a little bit more precise about your turning points or the levels that you are trading off of. Does that make sense? You can also go wider. You could go $10 wide if you wanted, and that starts to skew. Well, so with the 815 810s, so let's talk about that. So here's your 810 roughly. Let me find 810, sorry. Here's your 810, and then here's your 815, right? So now you're skewed even more. You're probably, $300 max profit to, $200 max loss or thereabouts, or maybe even more. So that now your risk reward is skewed a little bit better. But for that to give you your max profit, you have to, it has to close, below 58.10. And if it moves up at all, you're at max loss quickly. I mean, and that it's not to say that's not also a good trade. It's figuring out where you feel like fits your risk management better. And the probability changes as well. So when you put these on, before you place the trade, it will tell you your max loss. So it'll tell you your max profit and your max loss, because it knows that based on the option you're buying or selling, and then the option you're buying. And you can, of course, do the math a little bit. Most of these programs will do it for you. right? And you can also Google a description on how how that works. But you're taking a credit for the one you're selling, right? So if you're selling a way in the money option, you're gonna get a higher credit, and then you're buying an at the money option. In this case, buying the at the money option behind it to protect it. So it's limiting your overall risk, but it's also limiting your overall profit potential, right? It's not infinite anymore. Yeah, and so today has a high volt reading, or at least it's been having a high volt reading. If I look at the ticks over here, we've been above zero all day, right? And our advanced decline is up at a little over 1500, and it's kind of pinned there. So this looks like an up day, an uptrend day. So the question then becomes, has that move been made, right? Or is there more to this move? I think at the very least, if there's more to this move, we have to come down in and uh, at least test VWAP once. We haven't even really tested VWAP once today. And that would be a great place to get in, given all of these indicators, right? Given this is up here, given we're kind of pinned pretty high on the ADD, given that we've only had a couple of spikes below zero here on the ticks, and that we'd obviously get a little spike down, but then it would have to get back up above zero. But that might be a good entry if that happens. It was 10:30 Milwaukee, Mike, and I can show you what stats I have. Um, so on these credit spreads, I've been doing them for a while now. I'm still getting more data on the butterflies and iron condors, but on the credit spreads, I'm at an 80% win rate on those. So they are effective and they work well. Yeah, and 10:30 is the approximate time, and I can show you here on the SPY. So the idea is that 10:30 here's a good example. Yesterday, at 10:30, we had gone down and put in a low. Okay, you see, this is yesterday's. And I have these set to auto trigger at 10:30 based on certain criteria, right? So, and that is basically if we are above, 0.05% above our opening price at 10:30, it's going to take current price. That's not 10:30, but let's say that what I'm circling here is it's going to take current price, and it's going to put on if it's above zero, it's going to put on an at the money call credit spread, right? And then if it's below price, if it's 0.05% below opening price, it's going to put on a put credit spread at 10:30. Well, if you look at yesterday, at 10:30, we were coming into 10:30, we were literally sitting at or just a hair above opening price. And so I turned it off so that it didn't accidentally trigger, and then I waited. And so I waited until almost noon before I put on that credit spread, as we came up into this gap close and test of the other high. So that's an example of waiting for a different time. But today's, for instance, I haven't put it up here. Today's, for instance, was right at 10:30, right? And so on this SPY chart, if I go to a 5-minute, you can see all these blocks. Let me get rid of this. So these are the green ones are winners based on that strategy, and the red ones are losers. So here's two losers back to back, right? But then all of these other ones on the screen are winners. And as we continue to pan out, right? Winner, 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 winner. Here's a loser. Okay. But if you're 1-to-1, you can see this is a perfect example of a 10:30 reversal, right? And this reversal actually happened at 10:40. But my window is kind of that 10:15 to 10:45 window. This one right here, I mean, perfect reversal. Right? There's a loser. This one was a loser only because held to the end of the day. But you see, if we played that move and it came down, should have come off, right? Should have just taken that trade off. Here is a little bit later of a move that was like 11 o'clock, right? Here's a loser. So these are running about 80%. For me. And like any trade, it's not just at this time I do this based on this. There is a little bit of an art to deciding when to do it and deciding if the criteria for a trade are correct. But then there's also other ones in here that are, I'm trying to find a good example. I think it was this day we had our flush. With Fed talk, right? As that dropped in late in the day, I bought one into the next day. I bought a 1-day DTE down here, and then took that off for 80% profit into the following day, which then offset this loss here. Sorry, I got to catch up on some chat here. But these are pretty effective, and they're kind of a low stress way to play movement in the market. And you can play more intraday. I'm just these tests here, and trades are just the one trade per day, checking to see how accurate that is, because I was working on automating it, or I have automated it. So that based on certain criteria at 10:30, it just puts on that trade. And then it takes it off at a certain percentage. And the win-loss rate for that is 80%. So it's pretty cool. Excuse me. Yeah, sometimes it does matter if it's a gap up or gap down. But the data that I'm trying to get on is, a lot of times a gap close will happen around 10:30, and you'll get a reversal, that kind of a thing. But I'm not accounting for that right now. I'm just doing above open price or below open price. By a certain percentage, of course, and then trying that trade. No, I haven't, RJ. This is actually the video that I'm doing that. Right. So I'm trying to sell the slightly in the money, and I'm buying the slightly out of the money. So basically, I'm at the money when I make the purchase, right? So I'm selling the higher call on the option chain, right? The lower call that is slightly in the money, and then I'm buying the slightly out of the money right behind it at 5 wide. So kind of depending on where that is, I'm getting roughly a 1-to-1 per contract. That's the setting I have now. I would certainly like to see more of a move, one way or the other, and so that might change. That sort of auto trigger indication might change, but that's what it's at right now. It should probably be it has at least moved 0.1% from open price up or down. But that's where I'm at now. So you can see, um, my credit spread is here on the SPX. That one's looking good. My Condor is also looking good. Butterfly is at a loss right now, but there's always a reversion to the mean. Yesterday I had, what was it? I had a butterfly yesterday on the SPX, Iron Butterfly, which means I've sold the pin, call, and put at the same price. I had that set for 57.80 pin, right? So you look at today, and that was just an auto buy at 10 o'clock based on where it was at that time, and it was an auto pin at 57.80. As we it was looking like it not so good down here, and as it came up, it kind of pushed up through there. So I took profit. I think it was like 70, or no, it was like 80% of the credit that I got, which was like 160% on the trade, because I thought it was going to continue to shoot up, and then it rolls right into the close, and it pinned. The close was like 57.80.03. Had I just had a little more patience, that would have been a perfect pin. But I'll talk more about those later when I have a little bit more data on those. They're working well. I just want to have a little bit more data before I say this is something that I'm doing live, in an actual cash account. Does anybody have any other questions on that? Sprite, yeah. I mean, the higher the volatility, the better, risk reward you're going to get. I mean, like with a butterfly, like for instance, this butterfly today, it's I'm out of the money on it. It might come back, it might not. I don't really know. That pin is at 57.90. Um, and I've sold, to do an iron butterfly, you sell both the call and the put at 57.90, and then you buy the wings outside of it. So, but the interesting, I mean, just like a standard butterfly, I think that one is a, $500 total risk to make almost 2,000 per contract. So, but the percentage win rate, I think on those for me so far, I can look, is like 50% win rate. But if you have, yeah, so it's a 50% win rate right now. But if you're skewed, 3 or 4 to 1, or win to loss, dollars wise, you can still have a 50% win rate and you're making money. Yeah, Kathy, if it stays a 50% win rate, and that doesn't mean, now when I say win rate, like, okay, so let's say this butterfly, just here, I'll look it up. I'll look up what it actually, what the max profit, max loss is on it. Um, it is, hold on a second. It is, okay, so my if I pin exactly at 57.90 per contract, this would, the net would be, oh man, I don't know why I put that three so low. It'd be $1,435 max profit, right? And my max loss on that is 565. So if it closes outside of this box, anywhere outside of that box, that's a max 565 loss for max profit if it closes literally right there. Right? So the chances of that are pretty slim. But if it closes anywhere inside of this box, the profit is somewhere, inside that box is somewhere between, 1435 and 0. Right? So if I let this go to the end of the day and we're inside this box somewhere, I'm going to make some profit, right? But it's not either or. It's not 1435 or 565 loss. Does that make sense? You've to get this full award, you have to pin it exactly where it's supposed to be. And then there's kind of a range of, if it pins, you see this box, if it pins here at, 5802, I might only make $200. And then if it's, $2 higher than that, I lose 500, right? So there's kind of a range of where that pins. But in a lot of these, I have them set to take off at automatically. So let's say we range here for a while, and then we get to like 2 o'clock today, and we're kind of somewhere in this box because theta has decayed, right? Theta has decayed those positions that I sold. I have it set to just take it off at 50% of the credit, right? Which is about $750 because that's all, that's essentially a $1,500 credit, right? So it'll take it off automatically. Yesterday, as it was getting close to 50%, I turned that off because it looked like we were going to get closer to the close and be closer to my, magic pin number. So that's why I was able to get 80. But if I'm not watching it, it'll take it off at 50. RJ, not exactly. On toss, you kind of have to do it manually. Oh, Val, you want to know what this is? This is so these are the ticks displayed as a, kind of a graph, right? With the zero mark being right there, or roughly there. Let me change that really quick to a 0. So we have a line in there. And these are just the cumulative ticks as they're being added up, right? So this kind of gives you an idea. Are the cumulative ticks just continuing to creep up, in like a linear form? That's kind of a trend day. If we start to get some rollover, maybe those cumulative ticks start to get negative, that tends to look like a range day. Does anybody have any other questions there? Generally, when I'm looking at ticks, generally I use the tick indicator here. This is my standard tick chart with the VIX over here and the advanced decline over here. What I'm using here is just, I can't even remember what it's called. It's NYSE ticks, and it's just it's a free indicator. And this is a chart that I created so I can, track what the market is telling me at like 10 to 10:30 in terms of what kind of day we might be having. Lemon, I that's more a question for when I start doing these. I do a lesson on these. Right now, it's literally just a $20 wide SPX with at the 10 o'clock time frame. They is whatever is the closest at the money strike is what's being bought, or sorry, sold, and then the wings are 20 wide. So I don't recommend just blindly doing that until I have a lot more data on it. What I on the butterfly and the condors, I'm paper trading those to get more data on how I want to structure those. But the credit spreads, I'm trading real because I already have data on those, and then those are 80% win rate. Fog, you have a question about Sniper Pro? What is your question? Two messages. Oh, I see. Okay. IWM, 1 minute. Yeah. Um, these are just when you have a trend up day like this, right? Um, you Even though you're getting signals that would be a ready aim fire type situation, the market may be choosing to do something completely different. These are just, I mean, all these are they're showing you that we're oversold on the overbought on the 1 minute chart, and we're having an RSI, RSI MACD. MACD is converting. It's crossing over because there's a little bit of, a pullback happening here, but the overall market continues up, right? So all these are, it's not as if these are always going to work. They're just potential. It's just like when you're trading volume profile, right? Like you could have seen this up move and there could have been a volume profile. Oh, sorry about that. I did not mean to do that. Um, there's a volume profile line, here, and it's like, okay, well, I'm gonna take a play off of that, and then it didn't work. Well, the market's strong. It's pushed through that volume profile level. The same idea here is it's pushed through that little rounding of the MACD and the RSI in an overbought position. So identifying whether we're going to have, it's going to be a strong trend up day or not, that's the issue. That was always the issue with the 1.0s, right? Is that if you're in a strong uptrend, you're going to get stopped out on, trying to play the 1.0 here and trying to play the 1.0 here, and then maybe again trying to play the 1.0 here. The market's just, it's in a strong uptrend. And so the only real solution to that is, identifying that early and deciding to stop playing the 1.0s until you get a much clearer signal, or which is why I just created the 2.0 move, is once you realize that you're in a trend up day, or the market is trending, switch to a 2.0 trade so that you can capture that move instead of continuing to get stopped out. Does that help a little bit? Yeah, essentially. I mean, you just kind of want to. The key to these is identifying what kind of day you're in and then trading that accordingly. I mean, it's any trade, right? So, you don't want to get long on a tech name when you're having a trend down day in the Qs, even though you might have a signal that says get long in Amazon. Playing these other factors is really kind of important. You could also start looking at a further out 3 minute, 5 minute chart, but you're still getting a whole collection of symbols. The one thing I would say though is here is a good way to look at this. If your 1 minutes or your 3 minutes aren't working, and you're getting frustrated, then look to see, like on a 5 minute chart, you see this is strong bullish buying on a 5 minute chart. So when you get this signal here, and we're starting to that has run out, that's a good time to say, okay, well, that might be a good spot. But if you're seeing these here and this is rising, then it's probably not the best time to take a shot. I mean, you can take a shot on one of the first ones, but you don't want to just keep getting in the way. Okay, so the SPX is moving back down into VWAP. Right, we're still 14, almost 1500 on the advanced decline. The ticks have been above zero all day. To me, it would make sense to maybe try a bounce, right? Those are the signals you're getting if you come into that VWAP area, right? Let's look at it on SPY. We're basically there on the SPY. We're below that. Let's see what we have on a VP. There's not a lot there to support, but we're kind of coming into that area. I could see maybe a small bounce. How do we look on the Qs? We're still above it. Sounds like ticks are coming up. Not too bad. Yeah, Finnegan, you can kind of balance the different time frames and time it. If you're getting a lot of signals on a 1 minute, and then you can kind of move to a 2 and a 3, and then maybe a 5 to kind of get your confirmations in. That's for sure. Okay, I am going to jump off. Does anybody have any other questions for me regarding the credit spreads and kind of how I'm doing those? I'll put them here in chat. Yeah, it's usually actually AB1. It's usually about 50% of the credit I'm getting. So if it's a one lot and I'm getting, let's say 250 for 250, I'll take those off at $75. Generally, unless I'm at a key level that I'm pretty convinced, and that just comes from experience. So I mean, I would keep your, if it were me and I didn't have the experience, I would keep that to, you know, a true number. Um, what's the most consecutive days of losses on your backtesting? Two so far, and they tend. It feels like they tend to come in a row, right? And that's usually because the market is moving, right? It's breaking out of of like an area, or a it's coming out of a squeeze, right? That kind of a thing. So usually, at least that's what it feels so far, is that you miss on one day, uh, and then miss again the next day, and then it gets back on track. I just use ADD. Is that a question for me, Sugar Doc? This is just ADD down here. Yeah, profit target's at 80. Or if like it really pulls, and it's like it's not going to come back up there before the end of the day, you know, I'll just let it expire, because XPX is cash settled, so you can just let that thing expire. You don't have to take it off. It's great. So that's why I use that, and or XSP, which is basically the SPY. It's one tenth the SPX. So you can play with more contracts if you want. That also is cash settled, so you can just let that expire, as long as you're in the money or out of the money. Either way. You don't get it with ADD. It's essentially just this chart here, and up here it just says ADD. NYSE, advanced, minus, whatever. ADD. There's a couple other ADDs. That's interesting. Anyway. So I'll continue to put those credit spreads in there. TTD. So somebody asked about TTD today, and it was kind of coming in here, and it was kind of rolling over, and I didn't like this breakout. But then we broke this low and reclaimed, and right about here, I was like, ooh, that's a breakdown and reclaim. I think I want to buy that. And then I got distracted answering something in chat, and then turned back to it, and it was here. And I was like, damn it. And now it's just gone. So TTD looks great. The other thing I'm in is Meta. And I did put that one in chat. This chart looks phenomenal. And it also kind of looks like we might be in a little breakout and retest sort of situation. Yeah, look at that. So I picked that up down in here into this dip, into this sort of demand zone. And now it's pushing its way up. I bought next week's. RJ, right now I have it set at 0.05. But I think as I look at that more, most of the time I'm here to sort of manually do it instead of, auto, kind of just setting certain parameters. But I think if I was going to adjust it now that I've talked about it a little bit more, I would adjust it to up or down 0.1%. If it hasn't done that yet by 10:30, or by that 10:15, 10:45 window, um, I would wait until it does put in some level of like in this case, 12:20. We kind of pushed up to, and this is where chart reading comes in handy as well. We pushed up into this previous high area and started to get signals that we might be rolling over. So that was why I put that one on, and then I just did that one manually. Meta is in this great 78-minute squeeze. It's pushed up and away from where I bought it, but it's bought next week's. What did I buy? The 590s for next week in Meta. This morning's was 0.007. I don't think so. I mean, we're up 0.0444, and we're below that high that I bought it at. That spike high. Maybe you're reading it wrong. Did Costco get downgraded? Yeah, that bounce on Costco yesterday, it was starting to feel so heavy. I mean, it's run up like crazy, so of course it's gonna have a healthy pullback. All right. Well, if nobody has any other questions for me, Heike, I can't tell you that. Um, to me, I mean, the risk changes, right? So for me, right, I put it on down here. Oh, that's not the right tool. Darn it. I put it on down here. So my risk reward, I need to go to a bigger chart, but is going to be much different, right? If let's say I'm coming up to there, my risk reward is 3.5, 1 to 3.5 or more. Whereas if you keep your stop down here at this low and we come up, we come up to where we are right now, it starts to skew that risk reward a little bit. So if your plan would be to play it up into its most recent high, yeah, your risk reward is still pretty good. But also understand that you're playing a almost $600 stock. So a move of $4.32 in the underlying on an option is going to be a pretty drastic move for your option contracts. And so you have to decide, does that fit within my risk parameters, right? If I'm only going to put $1,000 into a trade, right, and these are selling for $650, well, I can only put one contract on, and if those are a 50 delta, right, then let's say I'm risking only $4. So let's say it's $4 in the underlying on a 50 delta. What's my loss going to be if it goes all the way down to that level? Right? The option is going to move 50 cents for every dollar move. So does that still fit? Are you willing to lose $200 or $300 there? Don't know, per contract. That's a personal decision. I can't make that decision for you. It hasn't shot up, but it's definitely not as close to that stop out level, so the risk reward does become more skewed. Okay, I'm going to jump off here. I will also get this posted up and put the link in here in chat so you can see it if you need to. And I know D-Man's coming back in about, well, at 3, so I don't know what that's about. A couple hours. And I'm around as well. So I will talk to everyone later.